Breaking news. TD Bank, a prominent Canadian financial institution, is currently caught in a whirlwind of legal allegations. The bank has found itself in hot water, facing potential severe penalties due to allegations of money laundering. These accusations are not to be taken lightly, as they are linked to Chinese drug traffickers and the illicit profits from fentanyl. The stakes are high, with analysts predicting that fines could reach up to a staggering $2 billion. But the financial implications are just the tip of the iceberg. The bank's operations could be impacted for years to come due to regulatory restrictions. It's a storm that has shaken the financial giant to its core. As the situation unfolds, TD Bank's stock price has taken a hit, dropping by over 4%. Let's delve deeper into the investigation and how TD Bank is responding. The allegations of money laundering have triggered a series of investigations into TD Bank's practices. The bank, which is no stranger to the complexities of international finance, is now at the center of an unfolding controversy over its anti-money laundering protocols. In response to these allegations, TD Bank has admitted to deficiencies in its anti-money laundering program. This acknowledgement is a critical first step on the road to resolution. It's a clear signal that the bank is taking the allegations seriously and is willing to face the consequences of any potential missteps. But the road to resolution is not without its hurdles. Canada's financial crime watchdog didn't hesitate to impose a hefty penalty on TD Bank for non-compliance with money laundering measures. The penalty, amounting to $9.2 million, is a sobering reminder of the gravity of the situation and the potential consequences of non-compliance in the banking sector. As the investigation unfolds, TD Bank is not sitting idle. The bank is actively cooperating with the investigations, demonstrating its commitment to transparency and accountability. By doing so, it hopes to rectify the deficiencies in its anti-money laundering program and rebuild trust with its stakeholders. Yet despite these efforts, the impact of the allegations continues to reverberate. The bank's stock price has dropped over 4%, underscoring the severity of the situation and the challenges that lie ahead. TD Bank is currently in the process of addressing these issues, but the full impact of these allegations is yet to be seen. This incident doesn't just impact TD Bank, it sends a ripple effect across the entire banking industry. When a major player like Toronto-Dominion Bank faces allegations of this magnitude, it sets off alarm bells far and wide. The potential implications of this case are vast and multifaceted. Firstly, it underscores the urgent need for banks to reinforce their anti-money laundering measures. Banks, regardless of their size or geographic location, must ensure they have robust systems to detect and prevent illicit activities. This is not merely a matter of compliance, it's about the integrity of the financial system as a whole. The TD Bank case could also spur increased regulatory scrutiny. Regulatory bodies around the world are likely to take this as a wake-up call, tightening their oversight and demanding higher standards of accountability. This could involve more stringent checks, harsher penalties for non-compliance, and a greater emphasis on transparency. Transparency, in fact, is key. In an age where customers are demanding more openness from the institutions they trust with their money, banks cannot afford to be seen as opaque or untrustworthy. They must be willing to open their operations to scrutiny and to communicate clearly with stakeholders. This is not just about avoiding penalties, it's about building and maintaining trust. Moreover, the TD Bank case could lead to a shift in the way banks operate. If penalties for non-compliance become more severe, banks may need to invest more heavily in their compliance departments and risk management strategies. This could lead to a reallocation of resources, affecting the banking landscape in significant ways. It's also worth noting that the incident isn't happening in a vacuum. It comes at a time when the banking industry is grappling with the challenges of digital currencies and the risks they pose. As we navigate this new frontier, incidents like the TD Bank case serve as stark reminders of the need for vigilance and stringent control measures. As the banking industry watches closely, this case could become a benchmark for future investigations and regulations. This could be the watershed moment that triggers a sea change in the banking industry's approach to risk and compliance. Only time will tell. While the situation is still developing, let's consider the next steps in this saga. The controversy surrounding TD Bank's alleged ties to money laundering is a complex issue, with potential implications that extend beyond the bank itself. To recap, TD Bank is currently under investigation for possible involvement in laundering illicit fentanyl profits. The bank has acknowledged deficiencies in its anti-money laundering program and is actively cooperating with the investigation. Looking ahead, we can expect a continuation of the investigation, with further scrutiny of TD Bank's practices and procedures. The bank may face more severe penalties, with analysts predicting fines that could reach up to $2 billion. Regulatory restrictions could also impact TD Bank's operations for years to come. This case is significant not only for TD Bank but for the banking industry as a whole. The final decision will undoubtedly set a precedent and could lead to stricter regulations and heightened scrutiny for all banks. Only time will tell how this case unfolds and what it means for the future of banking. Stay tuned for more updates on this developing story.